Stores. It's March 21st, so we're triple witching day. Let's take a look at a couple of headlines and a couple of common stocks here. Um, Looks like there's some kind of a kind of reinforcement of buying the plunge in Tesla from Elon Musk and seeing how that does. It's up 2%. Tesla. There's news out in EBS today, Emergent, just that they got a reaffirm of the price target of 15. It's only trading at 5 right now, so that thing's been reaffirmed several times by several different rating agencies for $15, but it's really in the basement right now. Baidu's getting a tiny bounce this morning. I'd like to look at Baidu. Let's jump in here. Baidu, we had the little sell down to low 90s, as I said, and then this cross looks inevitable now. And if we saw this trade back down to 88 or so, 89, it might be worth another look here. It might bounce, fill that gap first, and then come down. I don't know. We'll keep an eye on Baidu very closely. I think it might trade down first and then go back up. But regardless, I would love to see it break this long-term downtrend, this line here, with volume. So just something to continue to watch. That cross hasn't been a cross since looks like 2023 in February, and when that cross happened, it did pop pretty violently up. But we had that pop, we had the sell off, and now we got the noise in here. So we don't know exactly where it's going to go at this point in time. So USO oil. Let's take a look at oil. It looks like there's an impending bearish MACD cross. Simple moving average cross and bullish MACD with some accumulation here happening a little bit. RSI going higher. Again, it's in this triangular pattern. We don't know where it's going to go. It's going to break down. Is it going to shoot up? It's just a symmetric wedge, so we don't know exactly where oil will go. It's just stuck in this wedge pattern, creating kind of a contango pattern. So I expect it to trade sideways at least for a few more months, if not a year, for oil. So nothing too exciting unless you get some kind of outside event happening in the oil market. Let's see. Let's look at TLT. TLT's sold off a little bit. We are seeing. See, it looks like we got some kind of symmetric triangle happening on. We have higher lows here and lower highs, so we got some kind of symmetric triangle on the accumulation. So something's gotta give here in the future, 2026 perhaps, where this is gonna break out of the symmetric triangle and head higher. Because I can't see them raising rates when stocks like Nike are getting crushed today, and these consumer-centric stocks are getting crushed. We saw Nike come out with poor sales. No kidding, because Foot Locker as well is in the locker, so to speak. And FedEx just bombed on earnings. It was down 10% this morning, but now we got this gap here. There's nothing to like about this chart. Didn't break out to all-time highs. It found resistance in 300. There's really nothing I would do at this point. There is a gap down below. It looks like it was filled here, but regardless, I have no position on this. I'm completely out of FedEx. I don't believe it's going to go higher. I think next year probably, if anything, it'd go lower. But again, that's just speculation. No position on this. So Costco is just hanging in there. Same thing with Walmart. But we're seeing that there could be a short-term bounce. I would like to see maybe this retest of 980 and then come back down. It's way overbought. The PE is outrageous, like 50, which is double the historical PE. Same thing with Walmart. there is no justification for this. It's just a bit of FOMO, and people just keep on buying the high prices until they don't, and then you're left holding the bag. This all happens all the time in markets across. Same thing with gold. You got, for example, Peter Schiff peddling gold every single day. Yeah, sure, could it head higher here temporarily? Yeah, okay. But I think that it's very much overbought, very much overhyped. And when somebody's trying to sell you something, you have to be doubly certain that that thing is, a good asset to buy. And I don't believe it is here. Maybe back here, this basing pattern, it was great buy in 2021, etc. That's no longer the case. So, you're playing with fire up here. Maybe it goes higher, sure, but I don't think so. And I think it's going to kind of top out soon, and then roll over. And then a lot of people will be stuck holding the bag because different analysts and Peter Schiff and others have told you to buy gold hand over fist, but they have a vested interest in that. So I wouldn't trust any of those guys to tell you anything about the gold market with any kind of validity, because they're highly biased. SMH was one I talked about before. I said to sell the pop. Indeed, we came down. We had this bearish cross, 50 cross 200. So that's a death cross instead of the golden cross. We have the death cross here. I expect a further continuation of this death cross and a sell-off in SMH and the semis incoming, maybe in the coming months or so. This will also create a negative wealth effect, and things like homes and other large assets that are expensive will just sit on the market at extremely high prices. This whole situation reeks of 2005 and 2006. I agree with Stephanie Pomboy that basically, there are some good assets out there, but sitting in treasuries is probably, even though boring, yes, your money is safe, and that's probably a decent asset class to hold in your portfolio, is a set of treasuries. So I'm completely in agreement with Adam Taggart and Stephanie Pomboy in their views there of what's happening. And yeah, we're in an 05, 06 type of bubble here, but the bubble isn't necessarily just the housing bubble. Now it's an everything bubble, because the Fed has increased their balance sheet and has spread out money across the economy at a rate that's unprecedented. So I expect that there's going to be a retracement of that, and it's going to be very painful for anyone who holds any assets, including risky assets such as semis and even real estate, because if the semis go down and the market goes down, real estate goes down. Usually, first you see the fall in the stocks, then you see the negative wealth effect take hold, then you see the real estate market come down, not the other way around. So first we'll have to see a major sell-off in these equities, and then eventually that will lead to negative wealth effect and people stuck with their homes at extremely high prices, but with no buyers. So then they're forced to cut prices. So we haven't seen that yet, but I think that's the inevitable conclusion of this market cycle. So I just want to give kind of an update here, and a short update. Happy Friday and happy triple witching day. Like, subscribe, comment. If you like this content, I can make more content, and maybe have some fun animations or something in the future. All right, take care. Bye.